Hello friends, here are 10 common stock market myths. 1. Market timing. Myth. You can consistently time the market's highs and lows. Reality. Timing the market is extremely difficult, even for experts. 2. Bull and bear markets. Myth. Bull markets always go up and bear markets always go down. Reality. Markets can be more complex and aren't solely defined by rising or falling trends. 3. Past performance predicts future returns. Myth. A stock's past performance guarantees future success. Reality. Past performance doesn't guarantee future results due to changing market conditions. 4. Stocks are risky, bonds are safe. Myth. Stocks are always riskier than bonds. Reality. Both asset classes carry risks, and their safety depends on various factors. 5. Diversification eliminates all risk. Myth. Diversifying completely removes investment risk. Reality. While diversification helps mitigate risk, no investment is entirely risk-free. 6. Long-term always wins. Myth. Long-term investments are always successful. Reality. Long-term success depends on the quality of investments and market conditions. 7. You need a lot of money to invest. Myth. You need substantial capital to start investing. Reality. Many investment options are accessible to small investors. 8. Day trading is easy money. Myth. Day trading can lead to quick profits. Reality. Day trading is complex and risky, often resulting in losses for inexperienced traders. 9. Stock market equals sign gambling. Myth. Investing in stocks is the same as gambling. Reality. Investing involves research, analysis, and decision-making, whereas gambling is more chance-based. 10. Always follow hot tips. Myth. Acting on hot stock tips guarantees profits. Reality. Relying on tips without proper research can lead to poor investment decisions. Remember to approach the stock market with a well-informed and rational perspective to make sound investment choices. Thanks for watching video. Please subscribe, share, and like this.